So let's talk about crude oil today. And I want to go over all of the different ways, all the various ways that one could have engaged with the market, no matter how you trade. So basically on my channel, I go over low time frame methods, opening range, DR, and beginning to do more of now is higher time frame execution. So whether you like to execute on the 1 minute or the 5 minute or higher on, let's say, an hourly chart and even a 4-hour chart, I'm going to go over how you can look at the market, form a bias, and execute the way you like to execute. Let's go into it. Here's the daily chart. We talked about in my video yesterday about trap traders. We had this down move closing here. We had 3 straight down days, and the market then pushes up. And then once that happens, sellers, shorts are trapped. So anyone selling the close of these days is trapped at this level and is likely exiting when the market taps back into it. I just realized that in the video I did yesterday, I had this set down here. So the daily candles look a little bit different, but it's the same idea. So this is actually how it should be set. Basically, the market, as I mentioned, traps shorts, comes back down. Those shorts exit. New buyers come in as well off of this sort of support demand area. We get a nice rally into the close of the week. And so the first thing that I notice here is we've made a higher high. We've taken out this buy side liquidity. Now, one mistake I see a lot of people make is as soon as we hit a swing high like this, they give up on the long bias. They instantly look to short right away. And obviously sometimes that can happen. We can make a high here and then pull back into the range. But that doesn't have to happen. I mean, it can still do that, but you can have another day or two of higher prices or consolidation before that happens. And so for me, I'll be kind of 50-50 depending on how price behaves. But the fact that we've had this 1 day of expansion after hitting the lows here, I'm usually open to buying until we have 3 consecutive days where price makes a higher high, let's say. So if price here, if we look at down here and the price goes, let's ignore this one because it kind of wicks down and rejects, but 1, 2 higher highs, inside bar, 3rd higher high. So after this 3rd high, this is a day that I would not, this Tuesday I'm looking at here, is definitely a day I would not want to be buying. I would want to wait to see a pullback, which eventually happens here. Pullback that takes out a daily low is most ideal. So we haven't done that yet. We only have this 1 day of expansion. And so this is the 2nd day of expansion that I want to go over. And because we've only had the 1 day of expansion, I'm open to seeing a follow through of this momentum, depending on how price behaves. So the first thing I want to do is mark out this consolidation window, as I like to call it, the final 3 or 4 hour candle into the close. Let's just revise. It's the same level, but instead of it coming from here, I just want to focus on, this is the close. This is where, based on how price is going to behave, I want to assess, are buyers who are buying this close going to be defending this level and pushing price higher? Or will we see a failure above this level back down that traps longs, causing people to buy too high, trapping them, and then fueling a move to the downside? This is the schematic I talked about in my trap traders video. Apologies that I only have this drawn out in a sell scenario, which is going to be the opposite for what was occurring today on crude oil. But we can see we have 2 different kind of situations. Basically, we have our expansion day, closing price extended out, and we see that we can have a consolidation. In this case, sellers are defending the closing price. They're selling the close, trying to expect a follow through to the downside. The market kind of wicks around this area before pushing to the downside, versus an accumulation that then traps shorts too low can be a signal to take a trade perhaps in the opposite direction. So back to the chart, that's really where my headspace is at heading into this day following this market. And we can see how the day played out. The wicks do the damage and the bodies tell the story, as ICT likes to say, which I think is a very wise comment, because clearly the level holds, but intraday on a lower time frame, it's trapping shorts below this area. Now, if we look at the 3 hour, so sometimes I'll look at the 3 hour candle, sometimes it'll be the 4 hour. It's discretionary. I'll usually kind of switch between the two and just see how the general thing looks. I like the candle on the 4 hour, but on the 3 hour, I love seeing how this sort of pattern, I haven't really talked about much, but I call it a thin pin body. In this case, this is just an inside bar, but it's really just a narrow range body, tight consolidation, expansion off of that, and the market obviously retests it with a big bounce today. Now we have obviously this imbalance right here, which you can see on the 4 hour. One could literally execute on, the 4 hour time frame. This is a confirmation signal, a big wick off of the area. And then, this could be an entry using the higher time frame. You can trade intraday using higher time frame signals and higher time frame candles, and you don't have to worry about, as long as your stop placement and take profits are reasonable, you don't have to, babysit the trade. If you're busy, if you're going to a full-time job, if you've got family, if you've got obligations, you can still take advantage of it without, like I said, babysitting the timing. Obviously, it plays a big role too, because we know we have high impact news at 10 a.m. And so before that, at the beginning of New York, this 8 a.m. is the beginning of New York session as well. So we could see very strong 1 hour signal off of this level, reclaiming closing price. So basically closing price is being defended by the buyers, or by the buyers who control this market. Intraday, if we look at the lower time frame model, so if you've seen the opening range video, if you look at, now you're not going to compare, you're not going to have a correlated instrument to look for divergence with, but and the timings, I would be aware of 9:30 for crude oil, but not the same way that I would be for indices. I would still be aware of this 8 a.m. So, for me, I'm not up at this hour, but if I was, and if you're trading opening range, we can see that we have this liquidity grab at the open. There's so many ways that one could apply this. It's a liquidity grab before the open, and at the 8 a.m. open, it starts the move before at 7:45. You get the displacement and then the wick down into the imbalance in closing price at 9:30, right before the news. You could wait for the news. We know that the 10 a.m. news can sometimes be a turning point, and so we see that we have this long rejection and then big engulfment at 10 a.m. Depending on how much confirmation you feel like you need, this could be a type of entry. Now, if you're looking for how far can this thing go, because we're kind of at there's no structure here nearby, but you can use, okay. So you can see we get a perfect measured move off of this structure here. And so let's say you are waiting for a DR signal. So again, my hope is that by using this stuff I'm talking about with closing price and how to read kind of overall bias, you have more confidence in seeing what the likely setup could be for let's say a DR signal in this case. Now we have, actually, our DR high is actually not that. Our DR high is here. So this is our DR high and this is our DR low. I'm using the 15-minute chart because we can see the higher time frame PD array. Basically, we're pushing off here. Now, like I said, we have this expansion target that gets hit here. So before we hit that target, we have a pullback into this imbalance here. So that could be a trade. Scenario 3, if you look at it on the lower time frame, you get these raids here, 5-minute raids. So if you're able to watch this throughout the day and are just sitting there at the chart, we can see that we get this raid here before the close of the hour. Break in structure, series of down close candles. We trade back into it. This is a buy setup. Again, it's a little bit riskier because we're pretty extended on the day, but the overall framework, taking into account the trap traders down here, we had 1 day of expansion on Thursday, and then seeing how buyers are defending this weekly close at the beginning of this week after trapping on the lower time frame, manipulating below that closing price and seeing the impulsiveness off of the area. So regardless of how you want to trade, some days for me, not so much these days. And also I'll just point out too really fast, this isn't a great setup, but we have this scenario one where it's a higher time frame PDRA through the high of the range. So we have it on the hourly. So you can look at it here on the hourly, through the high. This down close candle is an order block. So it's an end of the day afternoon session, but there is if you dig down deeper, I'm sure there is. I haven't even looked at this, but I would imagine that there's a setup. 3 drives low, 3 drives down into this area. We have a tiny imbalance here that gets flipped. Let's see. So bearish imbalance that gets reclaimed. So, you can take some scalps. This is not a huge move, but into the close, this is where it would go to. This is probably a 1-to-1 opportunity, maybe a little bit less. But the point is that you never know exactly what the market's going to do, but we're making decisions based on our bias. So that's it for this video for today, and I'll see you back here again soon.